Zimbabwe's fintechs become cash couriers amidst dollar demand and economic challenges. By Satori News. In a scene reminiscent of blockbuster thrillers, private jets laden with millions of US dollars land at Robert Gabriel Mugabe International Airport in Harare, Zimbabwe. This extraordinary scene is not one of fiction, however, but the stark reality of a fintech strategy to satisfy the local thirst for US currency. This strategy, crafted by Mukuru, Zimbabwe's premier mobile money service, is emblematic of an economy where conventional financial practices have given way to exceptional measures. Zimbabwe's parallel currency market is driven by a deep-seated distrust in the local tanking currency and a preference for the steady US dollar, a gripping consequence of an economy battered by hyperinflationary episodes and questionable land reforms. This scenario has companies like Mukuru flying in cash monthly, if not weekly, to meet the rampant demand for dollar liquidity. The transport of cash through private planes, although unusual, is completely legal and underscores the lengths to which businesses must go to stay operational in the country. The innovation in the African mobile money sector, which processes an estimated $912 billion annually according to GSMA, starkly contrasts with the reality on the ground in Zimbabwe. Here, fintechs must supplement digital services with physical cash distribution, a nod to the nation's preferred monetary dealings. Mukuru, which stands at the forefront of this operation, caters to the Zimbabwean diaspora sending money home and locals eager to safeguard their savings from inflation and government interference with banking transactions. Mukuru's business model underscores not just a response to Zimbabwe's complex financial landscape, but also a significant pivot from traditional digital financial services. They underscore the reality that in certain markets, particularly those where trust in the financial system is low, fintechs must be versatile enough to operate in both digital and physical cash economies. This is substantiated by the fact that the company originated from a need to send money to Zimbabwe amidst sky-high inflation rates and saw exceptional growth over the past decade. Fintech enterprises in Zimbabwe have now become a lifeline for locals like Maureen Nyoni, who receives her children's remittances securely without fear of local currency depreciation. The reliance on cash remittances as a stable income has become so ingrained that the introduction of the gold-backed ZiG currency by the government has done little to shift preferences. As a testament to the adaptability of fintechs in Africa, as opposed to their counterparts in the developed world, companies like Mukuru and Mama Money navigate challenges like sudden regulatory changes, infrastructure unreliability, and even crime. Their operations have become essential, offering a solution far superior to informal couriers with their associated risks of dishonesty and delays. However, the government's persistent efforts to promote the ZiG and exert greater control over the economy continue to face strong resistance. Zimbabweans like Thembelani Nkube, who runs his own business, find the insistence on the new currency impractical as suppliers continue to quote prices in US dollars, implicitly shunning the ZiG. In summary, the saga of Zimbabwe's fintechs ferrying cash is but a vivid chronicle of a country navigating through economic disarray, highlighting the ingenuity and resourcefulness of its people and businesses. Yet, with the government still determined to promote its new currency, the battle for financial stability rages on. Thank you for choosing Satori News.